So, welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. We're going to be going through technicals with fundamentals. It's going to be an interesting mix. We're entering a rather busy week. Allow me to skim first through the calendar, just to have mention at financial data which are due out and could make difference. We had already a start with China's industrial production, retail sales, and urban investment, all for the past month. The retail sales part was problematic. We had a slowdown which was considerable. It slowed down from 4.8% year on year to 3% year on year. The issue with the retail sales of China is primarily related to the fact that the Chinese are facing tariffs in the EU and the US, and that forces them to actually rely more on internal demand within the Chinese economy. And if that's slowing down, that's an issue. Okay, some comfort could be provided by the tick up of the industrial output, but the urban investment growth rate, instead of accelerating, slowed down. That may be also some worrying sign, but to a lesser degree. Okay, overall, that, in my opinion, tends to be weighing on the Chinese yuan, and it could also weigh on the Aussie, given the close economic ties between Australia and China. We had also the release of Eurozone's preliminary PMI figures. And in France, we had the services PMI figure for December coming in higher than expected. That was a positive. On the flip side, we had Germany's manufacturing PMI, the preliminary for December, practically dropping even deeper, signaling a deeper contraction of economic activity for the spearhead of Eurozone's economy. Let's have a look how the Eurozone did as a whole. Okay, the manufacturing PMI figure remained relatively unchanged. The services sector rose above 50, implying more or less an expansion of economic activity. That was a positive. On the other hand, though, that would be also understandable given the Christmas period which is nearing. Eurozone as a whole and in combination of the sectors, which would be shown by the composite PMI figure, improved but showed a more shallow contraction of economic activity, which may have been a positive. Let's have a look at the market reaction on Euro USD at the time of the releases. Drilling to the 1 minute chart, starting with France. Okay, there was some market reaction, however, it was instant of 10 pips. There was a positive, so another positive on Germany's manufacturing PMI figure. Okay, there was no major market reaction. Practically whatever was gained was released back. Okay, back to the daily chart. Readjusting. Okay, for Euro USD, the picture is clear. We have a sideways motion which is being maintained between the S1 1.0470 and the R1 1.06. The RSI indicator remains slightly below the reading of 50. It's actually at 42, which may imply some slight bearish tendencies on behalf of market participants, or if you prefer, bearish predisposition. Okay. Once again, though, for a bearish outlook, I would require the pair to break below the S1 1.0470 clearly and aim, if not reach, the 1.0330. Let's have a look at USDJPY. USD JPY, which is on the rise, no doubt about it. And we can, let's readjust the chart a bit and reposition the labels. Now, JPY is weakening against the US dollar, and it's clear given that it has broken the 153.20. But I would be adding here that we have an upward trend line, and we had one, and then it took off. And it's indicative that in the past 1, 2, 3, 4, 5 days, USD JPY is rising, implying a losing streak on behalf of the JPY or a winning streak on behalf of the USD, whichever you prefer. Take your pick. We maintain a bullish outlook for the pair, and definitely we have to reverse the role of our 153.20 from a resistance line to a support line, given that it has been broken. We are moving upwards, the R3 at 162, which is also the highest point in our chart. The R2 at 158.35. The R1 at 155.35, 300 pips lower. Sorry, 200 pips. No, 300 pips lower, so it's correct. The S1 now, it used to be a resistance line, now it turns into a support line at 153.20. The S2 at 151.30. The S3 at 149.10. That's it. So we maintain a bullish outlook as long as the upward trend line remains intact. Note that the RSI indicator has risen, broken above the reading of 50. It's currently at 58.7, implying more or less a bullish predisposition on behalf of the market for the pair. The highlight for JPY traders is expected to be the release of BOJ's interest rate decision. Now, the bank is expected to remain on hold, and practically JPY ORS imply wide probability for such a scenario to materialize. I'm a bit skeptical about that. Okay, that would be a base scenario that the BOJ is going to remain on hold on Thursday, but I'm seeing risks related to BOJ's interest rate decision, which may be tilted to the upside, implying that the bank may hike rates. That's not the base scenario, I know it, but it's something which, if materializes, would be providing asymmetric support for the JPY, as it would be more or less taking the markets by surprise, and that could alter the pair's USD JPY's direction substantially. Once again, for the time being, the bank is expected to remain on hold, and that's a reason why JGB yields have been, if I'm correct, on the rise. Okay, let's have a look at GBP. Now, pound traders have a lot to think about, and I'm highlighting this because cable, there you go, was on an upstream. However, since Thursday it dropped, Friday it dropped even further, and today seems to be balancing out. It definitely has broken the 1.2675 support line. Now we have to turn this into a resistance line. I'm not so convinced about the bearish tendencies of the pair just yet. Mind you that on a fundamental basis, pound traders are to have a very, very busy week ahead. We make a start with UK's employment data, with the main rates and figures being practically for the month of October. And should the data show that the UK had a tight employment market in October, then that could provide some support for the pound. Furthermore, we also note the release of UK CPI rates. And should we see an acceleration of the CPI rates, that could imply some persistence of inflationary pressures in the UK economy, also supportive for the pound. And all of that more or less culminates in the release of BOE's interest rate decision. The bank is expected to remain on hold, and that's our assumption as well. The big question mark, in my opinion, regarding BOE's interest rate decision, if I'm correct, that's on Thursday. Let's have a look. Yeah, it's on Thursday. The big question now is whether the bank will be issuing a forward guidance which will be pointing towards some easing of its monetary policy or not. If the bank actually shows that plans to more or less start cutting rates in its next meeting, or that more rate cuts lay ahead, that could weigh on the pound. I would be also noting here the vote count. It's an interesting element. We may be seeing a vote change in favor of the bank cutting rates, which may more or less spark some dovish expectations among market participants for the pound, for the BOE, and actually weigh on the pound. So we have to maintain a close eye regarding BOE's interest rate decision on three elements. A, the interest rate decision itself, which is expected to be on hold, keeping rates unchanged. That's a bullish element. The accompanying statement and the forward guidance of the bank. Should the bank signal that it's prepared to, or is preparing to cut rates in its next meeting, if I'm correct, in February, that could be bearish for the pound. And the last element would be the vote count as such. Should we see an increase of the votes of policymakers which are favoring a rate cut, then that would be another signal which could be more or less bearish for the pound. On a technical level, despite the drop, despite the break of the R1 1.2675, today's upward motion, in my opinion, tends to signal the possibility of the pair stabilizing somewhat just below the R1 1.2675. Note that the RSI indicator has risen slightly. It's still below the reading of 50. But more or less the fact that it has risen tends to imply that the bearish sentiment is still there among market participants, but it's easing. And should it ease further, it could lead to relative indecisiveness on behalf of the market regarding cable's direction and allow a sideways motion to emerge. So there is a bearish movement, but with stabilization tendencies which should not be underestimated. Okay, let's have a look at USD CAD. So USD CAD is on the rise. That's clear. It has breached the 1.42 level, and we're going to be going to reverse it into a support line. Let's go hunting for a new ultimate resistance level. Unlocking the chart, go back. And here we have it. It's a beautiful clear peak upon which we can rest our R3. Mind you, this goes back to March 2020. So we're talking about a 4-year high here. And that's at 1.4665. Locking it in, readjusting the chart. Let's correct the labels. Now, the fundamentals regarding the loonie are definitely not in its favor, in the following sense that on the one hand, I still think that Bank of Canada tends to remain dovish, which is one factor weighing on the loonie. It had cut rates, if I'm correct, it was a double rate cut in its last meeting last week, and signaled that there would be a more gradual approach to rate cutting, more or less implying an easing of its rate cutting path. I'm not totally convinced about that. And at this point, given a fundamental level that Donald Trump is about to assume office, he's being inaugurated on the 20th of January, if I'm correct, in the last days of January in any case. And he intends to slap tariffs on imports from Canada to the US, then the fundamental picture turns even more negative for the loonie. And we expect that to be maintained, i.e. continue to support an upward movement for USD CAD. On the flip side, US dollar seems to remain supported also on a fundamental level. And I'm highlighting here 3 factors. The first would be Trump's intentions to impose tariffs on a number of imports from foreign countries in the US. And that could be products from the Eurozone, definitely China, Mexico, and Canada. Now, the fact that he more or less plans to impose tariffs tends to be acting as supportive for the US dollar. It certifies the dominance of the US dollar in the FX market. On a monetary policy level, okay, the Fed is expected to cut rates on Wednesday, but at the same time is expected to remain on hold in its next meeting. So it's going to be an interesting rate decision from the Fed on Wednesday in the late American session, as despite the bank actually cutting rates, it may be signaling that it intends to ease on its rate cutting path, which would be sounding a little bit hawkish. So in that case, we may be talking about a hawkish cut. Now, the elements which we have to be aware of here would be A, the interest rate decision as such, the rate cut. That's a 25 basis points rate cut expected, widely expected, according to Fed Funds futures. The forward guidance, and be advised here, the forward guidance will be split into 2 parts. The written part, which is to be included in the accompanying statement, but also I'm highlighting here Fed Chairman Powell's press conference. If I'm correct, it's half an hour later after the release. And should he sound more hawkish than expected, that would be an additional forward guidance which could enhance and extend volatility for USD pairs. It could have ripple effects also in US stock markets and gold's price. And the third element would be the new dot plot. The new dot plot will be showing where policymakers are expecting the bank's interest rates to land at the end of 2025, 2026, and beyond. Should we see Fed policymakers expecting interest rates to land at a higher level than what the market expects, as implied by the Fed funds futures, then that would be considered a hawkish sign and could act bullishly for the US dollar. Last but not least, I would be also noting the macroeconomic projections of the bank. And I'm highlighting here two indicators. The one would be growth and most importantly the GDP rate. And the second would be inflation. And we're talking about the core PCE rates right now. Overall, I'm highlighting also the macroeconomic projections of the bank because the US economy has proved to have a resilience which other economies do not seem to have. Say, for example, the US economy is growing and it has the prospect to continue to grow at steady paces while the Chinese economy is facing problems in its recovery, or the Eurozone's economy even is facing a possible recession in the next year. So, if you see it in a comparative way, the US economy tends to be a little bit more ahead, if not quite well ahead. And that's also supportive for the US dollar. So, practically, you have fundamentals politics, monetary policy, and macroeconomic data, all three of them in favor of the US dollar. Yes, we tend to maintain a bullish outlook for USD CAD for the time being, and we're basing this practically on two factors on technical level. The first would be the upward trend line, which has been guiding the pair since around the last days of September, if I'm correct, the 25th. But I'm also highlighting here the RSI indicator, which remains close. It's actually running along the reading of 70, implying a rather strong bullish sentiment on behalf of market participants for the pair. At the same time, my worries may be that the pair is nearing or has reached overbought levels, and that would be signaling the possibility of a correction lower for the pair's price action. I would be also noting here the Bollinger Bands and the fact that the price action, okay, the Bollinger Bands have three elements which we should keep an eye out. The first would be the fact that the 20 median average, which is also the median of the Bollinger Bands, is having a clear upward direction. And that tends to imply a bullish outlook. 1. 2. Note how the upper and the Bollinger Bands have diversified even further, widening the channel, which signals also that there is an upward momentum here. And the third element would be the fact that the price action over the past week has been flirting with the upper Bollinger Band. Now that tends to highlight the possibility of a bullish sentiment on behalf of the market for the pair. At the same time, though, may slow down the bulls somewhat. It's characteristic that after Friday's session, the pair seems to have stabilized a bit. But it's in the greens, it's edging higher, and tends to highlight that there is still a bullish predisposition of the market, which could push USD CAD slowly but steadily towards the R1 1.4340. Today, Loonie traders are expected to keep a very, very close eye on two elements. Actually, we have three. We have financial data, which is the number of house starts, and should that rise, that would be good news for Canada's construction sector, could be providing support for the loonie and vice versa. Later on, you have BOC Governor Tiff McClellan, who will be making statements. and I wouldn't be surprised to see him tilting more towards the dovish side. If that's the case, then yes, we may see the speech weighing on the loonie. Otherwise, should BOC Governor Tiff McClellan actually maintain a more hawkish approach, that could support the loonie. And the third element would be on a fiscal level. As we're getting from the Canadian government the mini budget this evening it's in the late American session actually, and that could have repercussions because should the mini budget show a tightening fiscal policy on behalf of Trudeau's government, that could weigh on the loonie. On the flip side, should the fiscal budget actually show a more expansionary fiscal policy or intentions towards that end, that could support the loonie. Okay, let's have a look now at the Aussie. Should be going down the drain, and ladies and gents, it does. It has breached the 0.6270, which we now have to turn into a resistance line. 0.6360, sorry. Let's go hunting for a new ultimate resistance level. Sorry, ultimate support level. Going back, possibly back to 2020 once again. Let's have a look. Okay. I'm taking it all the way. We could set a support line here. However, I prefer this true here. It's far more clear. And that's at 0.5980. Once again, we're talking about March 2020, and it should be in red actually. In green actually, sorry. Now, we discussed already the financial releases which came from China during today's Asian session. There you go. Let's correct the labels as well, setting the S3 at 0.5980. Now, there's not much going on for Aussie traders besides today's Asian session release from China. Okay, there could be some interest also at PBOC's interest rate decision. If I'm correct, that's during Friday's Asian session. Other than that, I would expect the Aussie to be led by fundamentals, and definitely the intention of US President-elect Donald Trump to actually impose tariffs on Chinese products, that could be bearish for the loonie. Sorry, for the Aussie. Also, let's be aware here that the Aussie is considered a commodity currency and thus is more vulnerable to the market mood. So should we see a more optimistic market mood emerging, that could provide support for the Aussie. Yet in my expectations are that market mood is going to be turning more cautious this week. And I'm highlighting this primarily due to the Fed's interest rate decision. Now, should the market mood turn more cautious, that could weigh on the loonie. Once again, for the time being, we maintain a bearish outlook, and we're basing this bearish outlook on two elements. The first element would be clearly the downward trend line, which has been guiding the pair since the early days of October. Let's have a look when exactly it was. Since the 30th of September, actually. So as long as the downward trend line remains intact, we maintain our bearish outlook. Even if it corrects a little bit higher, As long as the upward trend line is not interrupted, the bearish outlook stands. The second element supporting a bearish outlook would be the RSI indicator, which is just above the reading of 30. It's actually at 33.5. In my opinion, that tends to imply a rather strong bearish sentiment on behalf of the market for the pair, which could push it lower. There is a catch here, and the catch on the one hand is called the Bollinger Bands. Definitely, we have a nice clear downward trend on behalf of slope, or prefer, of the 20 moving average, which is the median of the Bollinger Bands, and that's bearish. Also note how the price action of AUD/USD has been flirting with the lower Bollinger Band over the past week, and that may more or less slow down the bears a little bit. Should the bears maintain control, I wouldn't be surprised to see the price action over the next week actually aiming, if not breaching, the S1 0.6270. Okay, that should sum it up for the day, but before we go, let's have a look at gold's price. It dropped, yet seems to be remaining stable today. For the time being, I see the case for the precious metals price to stabilize. You've been asking for it, given also that the RSI indicator is at the reading of 50. So thank you very much for watching. I hope that you found this report useful. From all of us here at IronFX, best wishes for solid trading.
Hey, hi everyone. Apologies for the late start. I had some technical issues. My computer couldn't connect. But we are back, and today's session we are going to be talking about market liquidity, understanding depth and volume. We will have some time at the end of my slides to look at a couple of charts. So if you guys have any requests for any charts you'd like me to go through, feel free to just pop them into the chat, and I'll be happy to go through them after I'm done with my slides. Okay, I think without further ado, we can go ahead and get started. But stop me anytime if you can't hear me or you can't see my slides. Yeah. So, okay, let's get started. So, as per usual, before we start, a disclaimer and risk warning. This information is not considered investment advice. or investment recommendation, but instead a marketing communication and a risk warning. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Okay, so I'm Melanie, and I'll be your speaker for today. I'm an investment analyst at Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We'll look at market depth and volume, liquidity providers, impacts of liquidity on trading, and so on and so forth. Okay, let's start. We'll start off by going through a bit on understanding market depth and volume in forex trading. So in the forex market, market depth generally refers to the measure of supply and demand at different price levels within the order book. So think of it as the amount of buying and selling interest in a currency pair across a range of prices. So when we talk about a market with depth, we're referring to a market with lots of orders at various levels, creating a deeper order book. So why is this important? Because in a deeper market, which means one with a large number of orders on both the buy and sell sides, traders can execute larger trades with minimal price impact. So this means that the price won't move much even when significant trades occur because there's enough liquidity to absorb them. So to visually kind of demonstrate this concept, you can imagine a situation where a large buy order enters your market. So in a market with high depth, this order will be filled by the multiple existing sell orders without significantly impacting the price. But if it's in a low depth market, a single large order may cause a substantial price shift because there isn't enough opposing orders to absorb it. Okay, so when it comes to market depth, there is this market depth chart that I have included here. And it's basically a graphical representation of the order book, showing us the price trends and the patterns that change as pending orders and liquidity fluctuate. So the chart shows your demand and supply levels. That's your X and Y axis. So the X axis represents the market prices, while the Y axis represents the amount of pending orders. So the chart basically enables the trader to understand the price changes and fluctuations in the demand and supply patterns. So through this, you as a trader can evaluate the efficiency of investing in the given security. So you can see the chart is split between two sides, left and right. So it represents the demand and supply of different price levels. So in the best scenario, both sides of the chart will be balanced or almost symmetrical. And any uneven tendencies will be depicted as the graph skews to either side, which represents either market shortage or excessive liquidity. Okay, so here, if you look at the left side of the vertical axis, okay, so the left side of the vertical axis is your buy wall. So the buy wall represents the cumulative value of buy orders placed on the given security at your different price levels. Okay, your buy wall is this side, the green side. And then your sell wall, which is the right side of the vertical axis, represents the cumulative value of the sell order that's placed on whatever asset you are trading at different prices. The vertical y-axis that represents your price level, and your x-axis represents the volume of the pending buy and sell orders that have been placed. So the mid-market price which is just the middle line going down, between the buying and selling, or it's just the middle point between the buying and selling, or basically your average between the highest bidding price and the lowest asking price. So here you can see, in the case of Bitcoin, the mid-market price, which is the average, would just be 100,000. Okay, so this chart, it works as an indicator, and it works by hovering over the chart, which reflects the number of assets that can be bought or sold at a given price point at a specific time. So it also shows you the cost of executing the market order and the implications on the market value. And TradingView actually has a depth of market chart as well. So I'll show you guys in a little bit how you can use that. Okay. So what's the importance of this chart? It's basically used to predict current and potential market directions, and also discover support and resistance levels, which assist investors in creating their trading strategies. So if the depth chart is tilted to the left, it means that the asset is illiquid and the price will potentially increase because demand is higher than the supply. On the other hand, if the chart is tilted to the right, it means the asset is sufficiently liquid and prices are more likely to stabilize or decline because supply is more than demand. So you can use this information to place suitable market orders. So for example, if the market is skewed to the left, means that there are more buying orders than selling. So there's lack of liquidity. So your product or your security is becoming illiquid and is more likely to increase. So in that situation, you would then place a buy order so that you capitalize on the likelihood of a price surge before selling at a higher price, so that you can reap your gains. Okay, any questions so far? Okay, I'm gonna show you guys the TradingView website, um, which basically shows us how exactly you can use it. You can watch the YouTube video as well, but I'll just briefly go through how you can use it on TradingView since we're talking about it now. So you can click on the trade button in the trading panel over here. Okay, this isn't very important. Yeah. So these are the key elements. I'm just gonna go through them over here. Let me see. Can you guys see my screen? Is it too small? Okay, great. So, oh, you can't see my screen? Okay, I should be sharing screen now. Okay. Yeah, I can zoom in if that helps. So the first bubble is our place orders. Second are your ask and bids. It's number 2. Number 3 would be your bids, so the volume of orders that's available on the market that we just talked about earlier. Number 4, okay, let me zoom in. Point 4, or the bubble number 4, basically are the cells for placing your orders. So when you click on it, a limit order is placed in them, and then when clicked while holding your control button, your stop order is placed. Okay, number 5, uh, which is these X's, it's just to cancel or limit or stop orders based on whatever security you are trading. Number 6 is your centering button. Number 7, the size of Number 7 is here. So that's just the size of all of your open positions. Number 8 is the profit and loss of all of your open positions. And you can also change your display setting. So if you click on it, you can change the element to money, pips, or percentage. And number 9 is your closing position. 10, obviously reversal. 11 would just be the button for you to cancel all of your orders on your current security. And number 12 is the quantity field. Um, you can see here units that basically shows how many units of your security you're purchasing or sold when you're placing an order. Okay, so how it works basically is it uses data from the broker, from the specific broker. So data is displayed in static mode, which means that the price series is fixed. So while price moves between these values, it's normally either above or below the designated range. Okay, so I will speed ahead and show you guys how you can place an order. Yeah, so to place a market order, you just basically click on that buy market button from above. And then you can go ahead and indicate the number of units you want to purchase or sell. And then similarly for limit as well, you just click on the cell next to the desired price. I think this is pretty straightforward, so I'm just going really quickly so we can move on and look at our have more time to look at more charts. And then for a stop order, you can hold down the control key and click on the cell that you want to place your stop order in. That's in the left column and buy and right column to sell. Yeah, and then you get a confirmation and you can change your orders as well. Okay, so yeah, I'll just get back to my slides. Are there any questions so far? Okay, we have a question. How how does it work? Okay, so like for example, let's take a random asset, right? And maybe it's currently priced at $1. The DAOM will show how many orders there are for prices of 90 cents or maybe $1.10 and so on. So in doing so, it will show you the supply and demand for that asset without having to switch tabs or to manually track. How did you display it as chart? Okay, let me open my trading view and we can go through this. Okay, let's go back here. Okay, What do you mean by how do you display it as a chart? The market depth. So in order for this to work, you actually have to connect your TradingView account to your brokerage account first. Which graphic? This is just on the TradingView website. I'll just pop the link into the chat. Okay. Let's go ahead and continue. So next, we'll just quickly look at the role of trading volumes now. So when it comes to volume, it's basically simply put the total amount of an asset. So it can be like your currency pair or whichever security like traded over a specific period. So it's a powerful indicator of the market's interest in a given asset and can signal potential future price movements. So high volume often reflects strong market interest. So um, for example, when trading volume is high, it can indicate that many traders are engaged or possibly, confirming the strength of your trend. So in the case of a low volume, it might show lack of interest or uncertainty, which can make price movements less predictable. Okay, so if we take a closer look at the difference between high and low trading periods and how they might influence price directions. Here it says, for instance, high trading volume often accompanies strong trends, meaning that if the price is moving upward or um, downward, a high volume can confirm that movement. So on the other hand, low volume periods can lead to erratic, unpredictable price movements because there are fewer active traders to support a clear trend. So to visualize this, you can imagine a currency pair that's experiencing a strong uptrend with high trading volume. So this high volume basically supports the trend and adds stability to the upward movement. So it makes it less likely to reverse suddenly. However, in a market with low volume, say um during a holiday maybe, price movements may be much more volatile since there's fewer active traders. So there might be quite rapid and unexpected changes because of that. Okay. So if there's more sell orders than buy orders, prices likely to drop. Yeah. So when there are more sell orders than buy orders in the market, there's kind of that imbalance, and that typically will drive price down. So that happens because there's more supply um, of sellers wanting to sell than demand, which is basically buyers wanting to buy at your current price. Okay, I hope that answers your question. Okay, great. Okay, let's now look at the relationship between depth, volume, and price movement. So if we bring all of both basically all of that together, In general, high volume and deep markets will tend to have less price volatility. So that's kind of the relationship between that. So high volume and deeper markets have less price volatility. Reason being that these are stable conditions where you're likely to see smoother price action with fewer sudden spikes or drops. So high volume and high depth provide a kind of buffer, absorbing large trades and reducing the likelihood of erratic price changes. On the other hand, low volume or low market depth can create the opposite effect. So in these conditions, price volatility increases, meaning you're more likely to see sharp price spikes or sudden drops. For example, in a low depth market, even a modest buy or sell order might shift prices significantly because there aren't enough opposing orders in the book to counterbalance it. So we can look at this by thinking about two scenarios. So during quiet times, such as weekends or holidays, the market typically has lower depth and volume. So this creates a volatile environment where even small trades can lead to large price swings. So in contrast, if we think about an active times, so like during a major economic announcement or central bank decision, that will bring higher volume and more market depth. So this depth and volume can provide greater price stability and reduce the impact of your individual trades. Okay, so that's why we often will recommend that you look at your fundamental analysis so that you are kind of aware or you can anticipate these periods of active periods compared to quiet times as well. Okay, so now that brings us to looking at some of the main factors that influence liquidity in the Forex market specifically. So liquidity, as we know, can vary significantly throughout the day and in response to certain events. So understanding these variations can help us to make better trading decisions. The first thing is time of day. So liquidity, we mentioned, changes throughout the day based on trading sessions. So the Forex market operates 24 hours a day, but liquidity is not consistent. So it fluctuates depending on which major trading sessions are open. The main sessions are Tokyo, London, and New York. So typically during the London-New York overlap, which happens around 1 to 5 p.m. GMT, we typically will see the highest liquidity. So this overlap period brings together two of the most or the largest financial centers in the world, which creates more active trading, more trading activity and tighter spreads and smoother price movements. On the other hand, low liquidity will tend to be during the Asian session and on the weekends. So that's when fewer traders are active. So low liquidity in these events or in these periods can lead to more erratic price movements. So it's generally advisable to be cautious when trading outside of peak hours. Number two would be economic events and news volatility. So these events are pretty significant factors that influence liquidity. So liquidity tends to be high during or on the lead up to scheduled announcements, since traders will tend to take positions based on the anticipated outcomes. So examples of major economic news events would include Federal Reserve meetings, non-farm payrolls, unemployment reports, so on and so forth, and also interest rate announcements. So interestingly, while liquidity is high before these announcements, it can drop sharply immediately after, especially if the news was unexpected or significantly impacts market sentiment. So this post-announcement period can lead to increased volatility, making it really essential for you to be prepared for any sudden price movements. Okay, number three, geopolitical events and policies. So this is also another major factor influencing liquidity. This can be like your elections, wars, and policy shifts. Such events will introduce uncertainty, and when the outcome is unclear, traders will often hesitate to open new positions. So, for example, in times of political tension or economic sanctions, liquidity can dry up because there's a lot of uncertainty about how these events will impact the markets. So that's why we see lower liquidity and increased volatility during your global crises. So events like Brexit or the Russian-Ukraine conflict or even the recent elections can lead to low liquidity conditions um, while traders try to assess their strategies amid the instability. And lastly will be central bank interventions. So this is pretty straightforward, so I'm just going to verbally explain it. Um, Central bank interventions will include things like your Federal Reserve, your ECB, the European Central Bank, or Bank of Japan. So those are kind of the main central banks that will impact liquidity and currency values through their policy decisions. So if they adjust interest rates or they intervene in the FX markets, and they can also use open market operations to either inject or withdraw liquidity from the market. So that's how they influence liquidity. So I guess just as an example, when a central bank announces a significant policy change, like an interest rate hike, it can increase liquidity as traders adjust their portfolios. So similarly, open market operations where a central bank buys or sells large volumes of currency can have a major impact on liquidity levels. And in turn, that will also affect currency prices. Okay, any questions so far? No? Okay, great. That actually brings us to the end of my slides. Um, so let's go ahead and take a look at some charts now. Okay, I think we'll start off by looking at DXY. Yeah, we'll take a look at gold after this, since gold is inversely correlated to DXY, so we can see how that might affect the prices. Okay, so on our weekly time frame, we can see the price of DXY is shooting upwards. Let me just connect my mouse. Okay, so on our daily time frame, you can kind of see prices testing this resistance level here. Um, Even though the overall trend is still pretty bullish. Okay, this is gonna be my second resistance. Okay, and for my first support, I'll just place it maybe here. Okay, so this is just purely based off of graphical analysis. So I'm just looking at where the swing highs and the swing lows line up and trying to identify all of the significant levels. Okay, now I'm going in with our Fibonacci levels. I'm starting off with a retracement, and you can see my 50% lines up. Okay, I'm trying to see if we have any projections here. Our 61 kind of lines up and 78 as well. So just keep those two. Okay, I have another projection here. I think. Okay, so my 100% also lines up with my first resistance. Even though the 61.8 does line up nicely with our first support, we can't use it anymore because price has already broken out of that level. So we'll just use the 100. And for our retracement, okay, my 38.2 lines up with my first support. Okay, I think this is our confluence area because we have about two, yeah, we have two Fibonacci levels that line up nicely. So if you're not familiar with confluence levels, they're basically when two or more Fibonacci levels line up in that same area. And what's significant about it is that prices tend to be attracted to these areas, but might not be able to push past them. Okay, so that's why we want to try and identify these levels. Like you can see here, it's a confluence area, and you can see price has also tested this level multiple times in the past with 1 and 2, 3 swing highs. So now you can see price is facing a bit of resistance here. Okay. Now let's take a look at some indicators to see what they're telling us. So I like to use Ichimoku and MACD because at one glance you can tell exactly what the signals are. So with MACD, it's giving us a bullish signal. Ichimoku is also giving us a bullish signal. Let's look at Bollinger Bands. Okay, it's also pushing above the upper band of the Bollinger Band, so that's also giving us a bullish signal. And we normally will recommend you to follow the general trend, which we can see here is pretty bullish. But we just want to highlight this level just in case, just so that you are aware of any potential reversals of this level. So as of right now, it is pretty bullish. I'm just gonna just have to be careful about this confluence area here. Okay, let's maybe look at some momentum indicators. RSI, stochastic. Okay, so we have prices moving in an ascending trend line on our RSI. Let's take a look and see if, okay, on our stochastic as well. So there, all of the indicators that we've used so far support our bullish analysis. Okay, and yeah, this is on our daily time frame. Okay. Um, any questions before we move on to gold? No? Okay, let's move on to gold now. Okay. So, like I mentioned earlier, gold and DXY tend to be inversely correlated, because they're both seen as safe haven assets. Um, but in the event of, geopolitical events, there are occasions where they do move in the same direction. As of right now, you can kind of see prices of our DXY going up, and while our gold is dropping quite significantly. Okay, so on our weekly time frame, prices are moving downwards, daily as well. Maybe let's look at our 4 hours. Okay, we can see prices moving in a downtrend as well. So going ahead with our horizontal levels, this will be our first resistance, second resistance, or maybe further down here. Okay, because it's in line with two swing lows. And then for my first support, I'll place it mm, okay, maybe down here. Since it's an overlap level, it's in line with multiple swing highs and swing lows. Okay, so going in again with our Fibonacci levels, you can see my 38 and 61 both line up. Mm, okay, no. I think my 23 lines up. Yeah, so my 23.6 lines up with my second resistance. Um, we might have an inverted Nike tip here as well. Yep, so my 161 also lines up. Okay, it lines up with my first resistance. For reference, this is the Nike tick I'm talking about. It's inverted, so if it's upright, it'll look like that. Now it's kind of upside down, like that. Okay, so this area is also a confluence area. So you can see price kind of testing that level as well. Oops, okay, I labeled it wrongly. This should be our first support. And then this should be our second support. Okay, because I'm expecting price to continue to drop. Okay, again, this is just kind of like a warning because it's in line with a swing high and swing low, and also with multiple Fibonacci levels. Okay, so let's pull out some indicators again. So price is moving below the cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal, so they both support our analysis. Bollinger Bands, price you can see pushing below our bottom band, so that's also supporting our analysis. Okay, there isn't really a descending trend line here, so I'm going to remove that. But you can kind of see prices moving into the oversold regions. Uh, here as well on our stochastic. Okay, but I'm not gonna use that for now. Let's maybe look at our parabolic SAR. Okay, we have prices moving below the indicator, so that's also a bearish signal. Okay, if you want to be a little bit more careful, you can add yeah, I was gonna add this kind of like an intermediate level here instead, in line with the 50%. Because that's where I wanted to place it originally, since it's in line with a whole bunch of swing highs in this area. So it is quite a significant level, also because it's in line with a 50% retracement. So we have a couple of things supporting this level. 50, 61, and 32, 38. Okay, any questions? Okay, if not, since we briefly talked about looking at an economic calendar to keep up with, all of the announcements, I just really quickly want to show you guys Forex Factory. This is just an option that you can look at to keep up with your fundamentals. So you can look at the events for the week or for the month, whichever you prefer. And you can see I have it to only focus on the orange and red, and that's medium to high impact events. There's also low impact, which is the yellow, and non-economic, which is the gray. And that includes any like bank holidays, which, as we have seen during our slides, those are low liquidity periods. So it's quite important to know those as well. Okay, so like this week we had the French bank holiday, Canadian bank holiday, so you would try not to trade those during that time. US bank holiday as well yesterday. So yep. And it also gives you the actual forecasted and previous values. So once the actual value is out, you are able to compare at one glance. So I normally just prefer to look at the orange and red icons, or maybe any bank holidays for reference. And you can see it's a lot more streamlined and it's easier to go through and keep track of the events for each week. Okay, and it also helps you to categorize whether it's a high impact event. So like we mentioned earlier, unemployment rates, non-farm payrolls, central bank announcements, or yeah, I think inflation as well would typically be considered a high impact event. So yeah, you can look at this for reference as well. Okay, are there any questions? Okay, if not, that's all I have for you guys for today. Thank you guys so much for joining me. I hope you guys found this session helpful. Have a great rest of your week, and I will see you guys again next week. Thanks, everyone. Bye.